Welcome to Adam Hill Accountancy. I am Adam Hill, and today I'm going to be showing you how to complete your self-assessment tax return if you are self-employed using HMRC's free online tool that you access via your government gateway. As always, if you could ensure that you like the video and subscribe to the channel, I will then ensure that I continue to make this type of content available to everyone for free. Before we start, I also want to mention that this process I'm about to show you for filing your tax return is being overhauled. From April 2026, HMRC are rolling out MTD, or Making Tax Digital, for income tax, which will require certain individuals with self-employed or property income to report to HMRC every 3 months and do it via MTD-ready software. So you wouldn't be able to use HMRC's free online tool. To see how you may be impacted by this and find out how I may be able to help, visit Adam Hill Accountancy via the link below. Now, let's get started. Now, once you've logged into your account and you've confirmed all your personal details, your address, etc. are up to date, then you can move on to the Tailor Your Return section, which is number 3 on the right-hand side menu here. So tailoring your return is telling HMRC about the different types of income that you had, the different exemptions that might apply, who's completing the return, all those types of details, and they'll use that information to then populate the pages of the return that you actually need to complete. So that if you don't have capital gains, for example, then you won't have to tell them any information about capital gains. You won't complete those pages at all. So if we work through this, it's 3 pages of yes/no style questions. So they're fairly straightforward to answer, providing you know what they're getting at, what they're trying to ask. So I'll give you a little bit of narrative to each one. So the first question, were you an employee in the tax year to the 5th of April? So sometimes the portal will already know and will pick up that you had employment income, and it will tell you, we know you have this much income and you paid this much tax in this job. In my example, it hasn't picked it up this year. It has in previous years. It doesn't seem to work every year. It doesn't seem to work for everyone. Irrelevant though, you need to confirm employment details. You need to put your employment details, how much you earn and how much tax you paid, on your tax return, even if they're not already picking them up. I'm going to say no in this example because I'm just going to show you self-employed income, but if you did have employment as well, you'll obviously tick yes and provide the details there. The second question then is the one that relates to self-employment, so I'm going to say yes to that one. Was your turnover more than £1,000 in total from all self-employments? So £1,000 is the threshold. There is an allowance of £1,000 of trading allowance, and if you earn below that from all self-employments, then technically you don't need to declare anything to HMRC. That income would just be exempt, but it's all self-employment. So if you had multiple trades, maybe you're selling for a profit on eBay, you're buying and selling goods during the day, and then you're doing a plumbing business on the side, then you need to combine the total income from those 2 self-employments, as the allowance is only 1 allowance per person. How many self-employments did I have? So I'm going to say 1 in this example, and I'm just going to say example as the name. Were you in a partnership? A partnership is just 2 or more self-employed people working together. However, they would normally be doing it under something known as a partnership agreement, which details who's in the partnership, who's entitled to what, and all those types of details. So you wouldn't unknowingly be in a partnership because you would have signed and agreed to one of those partnership agreements. Did you receive income from UK land or property? This is rental income really, although there can be other types of income that fall in this section, but for the most part, if you have rental properties, this is where you would declare that. Again, you have a separate £1,000 property allowance, which could be used against property income. So anything below that, if you had a small amount of rental income, again, technically, provided it's covered by that allowance, you wouldn't actually need to tell HMRC about it. If you received any foreign income, so maybe you're working overseas for part of the year, and then capital gains at the bottom. So capital gains normally apply when you dispose of chargeable assets, which would typically be investment properties, shares, these types of things. Certain assets, your personal possessions, if you're just selling bits and pieces that you from around the house that you own on eBay, you're not usually going to have a capital gain on those. Your car, if you dispose of a car, you're not normally going to have a gain on that. Again, I'm saying no, and I'm moving on to page 2. Bank interest. So it's becoming a little bit more common now. You do have a small allowance for bank interest. That depends on how much you're earning. The savings allowance varies. It's lower for basic rate taxpayers than it is for, it's lower for higher rate taxpayers than it is for basic rate taxpayers. In this example, again, I'm saying no. Dividend income. If you have shares in companies, you may receive dividends from those shares. Did you receive any UK pensions, annuities and state benefits? So pensions and annuities would need to be declared here, and so would state benefits. However, one question I do get asked a fair amount is universal credit. Does it go on here? Universal credit is not taxable income, so it doesn't go on the tax return. It's not a taxable benefit. Certain other benefits are taxable, and that's why there is a section for them. Did you or your partner, if you have one, receive child benefit? So if you earn over £60,000, you can click on the drop down just below that. If you earn over £60,000, then that child benefit starts to get retracted. So again, you would need to declare that you are receiving child benefit, and potentially once you reach a certain threshold, then the full child benefit gets taken back from you. Did you receive any other UK income, for example, employment lump sums, share schemes, life insurance gains? I've said no to that one. These ones are becoming a little bit less likely now. Any income tax losses in the year? So just note, this is not talking about your self-employment. So if you made a loss from your self-employment, that's not what this is talking about. This is talking about income tax losses on your other UK income. Again, use the drop down. It'll give you a little bit more narrative about what they're trying to get at. Are you liable to pension savings tax charges? If I use the drop down, you can see the allowance was £60,000 for the year. So if you pay more than that into your pension scheme, then you may have to pay a charge, as pension contributions are restricted due to the generous tax relief that you get from them. Now looking at page 3, did you make contributions towards a personal pension or retirement annuity? This does not include payments that you make to your employer's pension scheme, which are deducted from your pay. That's because when you pay into a pension scheme via your employer, they pay into it from your gross salary before any tax has been deducted. So you haven't paid any tax on it, which means the gross amount is going into the pension and you get your tax relief at source. When you make contributions to a personal pension plan, you're normally doing that out of your post-tax income. So you've already paid the tax, it's gone off to HMRC, and then you're making a contribution sort of net of tax. You're still entitled to tax relief on that. So sometimes the pension scheme will go and obtain it and they'll top up the pension by the basic rate tax that you've suffered, but other pension plans won't do that. And what you'll need to do is declare those contributions on your tax return, and you'll get the tax refunded back to you or deducted off your total liability. So you're getting the same tax relief, but in a different way. It's also really important that higher and additional rate taxpayers detail any personal pension contributions on here as well, because although their pension scheme may get the top up at basic rate, so they'll get a 20% top up, they're entitled to 40 or 45% tax relief because that's the highest rate of tax that they pay. So they'll get that additional tax relief by ticking this box and detailing it on here. Did you give to charity? I'm saying no. Again, you can get additional tax relief if you're a higher or additional rate taxpayer and you've made contributions to a qualifying charity. Would you like to claim married couples allowance? This only applies to people that were born before 6th of April 1935, so it's becoming increasingly less likely. But the one below that, marriage allowance, so by transferring 10% of your personal allowance to your spouse or civil partner, that one's normally beneficial or normally applies where one of you is a basic rate taxpayer and one of you is earning below the personal allowance, so £12,570. So if you're earning below that, you're not making full use of your personal allowance. So HMRC allow you to transfer 10% of your allowance to your partner. And then that way, between the two of you, you end up getting a tax saving. But it's only allowed where one is a basic rate taxpayer and one is below the personal allowance. Do you want to claim other tax reliefs and deductions? So this is community investment tax relief, venture capital, trust shares, maintenance or alimony payments. Again, I'll say no. Again, becoming less and less likely as we work through these, but if any of these do apply to you, just use the drop down to check the narrative. Have you had any 24-25 income tax refunded or offset by us or Job Centre Plus? No. Again, universal credit is nothing to do with this. Did you have a tax advisor? Have you used one or more tax avoidance schemes? Tax avoidance schemes normally have a reference or some kind of number, a code allocated to them. And when you use them, you're given that code by your advisor. And you have to declare that scheme on your tax return and provide HMRC with the details. HMRC believe that they shut down most of these schemes and they recover most lost tax via the courts. Whether that's true or not, I don't know. You would imagine people wouldn't do it if that was the case, but you would need to declare any tax avoidance schemes on your tax return. Are you acting in capacity on behalf of someone else? No, I'm completing my own tax return and I'll save and continue. So there I've tailored my tax return. If I scroll down, you can see as well as a tailor your return section, we've added the self-employment section here. We've got class 2 national insurance contributions and everything below this, unpaid tax and other debts, overpaid tax, not paid enough tax. These are all standard sections that you can't get rid of. So you might be wondering, well, why has this appeared here? I didn't tell them that I needed to complete these sections. Everybody has to, unfortunately. So the only one that I've kind of pre-populated or told them that I need to complete are the self-employment pages, which are showing here. Then to actually enter the numbers and provide the details of my self-employment, and then continue through the rest of the pages that need completing, I can just click on enter self-employment details here. If I scroll down, the first question is, did you have annual turnover of £90,000 or more? I'm going to say no. I'm going to provide very basic details here. Were you affected by basis period reform? Basis period reform was a way of aligning the amount of tax people pay or the period that people pay tax on with the tax year. So I'm going to say no. If you are already preparing your tax return to or your numbers to the 31st of March or the 5th of April, it wouldn't have applied anyway. And then if any of the statements below apply, so if you're a foster carer or shared lives carer, or you wish to adjust the profits chargeable to class 4, you would tick one of these boxes. In the majority of cases, none of these apply, and they give you an option for that at the bottom. And then we can actually provide details of our self-employment. So a description of the business. So I'm just going to say accountancy services. You don't need to give huge amounts of narrative here, and usually a few words or a sentence will be sufficient. Postcode of the business. Now just know, quite a lot of these are actually optional, so you'll see them marked on the right hand side. You don't necessarily need to provide that information if you don't want to. However, I always think if it's going to be useful for HMRC, then make sure you put something in there. If it's optional and it's not going to benefit them in any way, then you don't necessarily need to provide it. Has your business name description changed in the last 12 months? Mine has not. Again, I can tick no, but it's actually optional. If your business started after the 5th of April 2024, enter the start date. That won't apply to me because I've been trading for multiple years. Did your business cease trading? With that, they're looking ahead to next year to determine whether to expect a tax return from you. And then we can provide a date that we made our accounts up to. So most of the time, you would either do your accounts to the 31st of March, in this case 2025, or you would do them to the 5th of April, in this case 2025. So I would try to stick with the same date every year. So if you do the end of March, make sure you do that next year and the year after, and then continue with that. If you do 5th of April, they're both considered to be the end of the tax year. So either is absolutely fine. I'm going to go in this case with 31st of March 2025. Did you use traditional accounting rather than the cash basis to calculate your income and expenses? So if you've completed your tax return using this tool previously, I think this is one of the things that they've actually changed this year. They've flipped around the wording of this question. So it used to be, did you use the cash basis rather than traditional accounting? So they would kind of assume that you were doing traditional accounting rather than the cash basis. Now they're assuming that you're doing cash basis. A simplified overview of what that means is that your income and your expenditure under the cash basis is accounted for when you actually make payment for something or when you receive payment for an invoice. Under traditional accounting, you account for transactions as you incur an expense or as you earn income, which are slightly different. If you think about your income, for example, if you raise an invoice to a client at the end of March, but they don't pay it until the end of April, well, under traditional accounting, you need to account for that one at the end of March because it's already earned. Under a cash basis, they haven't paid it, so you're not going to account for it in this tax year. It would go into the next one. So I'm going to say no because I'm happy that I've used the cash basis, and I'll continue. Now I can provide the numbers behind my tax return. So I'm going to provide very simple figures here, 75,000 of turnover. Any other business income not included in turnover, you can use this drop down here. But again, these are quite unlikely. For most businesses, your income, your turnover is all going to fall into that top box there. Trading income allowance. So the trading income allowance is £1,000. So if I didn't have any expenses, or let's say I had 500 of allowable expenses, then what I would do, I would ignore the expenses and I would claim the trading income allowance instead. And that's how I would input it. I would take the full £1,000 from here. Now, you can't use that to create a loss. So if you only had 500 of turnover, you had no expenses, then you would have to put 500 in here to bring it down to zero. But given that I've got 75,000 of income, I would be able to claim the full £1,000 allowance. Now, in this example, I don't actually want to do that. What I want to do is scroll down and I want to provide my expense figures. So I have two options to do this. One option is to provide a detailed breakdown. So if I tick detailed, and I move on to the next page, you can see you've got a bunch of boxes and you could provide the details of, well, I spent £2,000 on telephone, fax and stationery, and 500 on bank interest, and 1,000 on accountancy and legal fees. That's one option. If you have that information available, then you can use that breakdown. I'm going to head back to the previous page and I'm going to select a single total value. I'm able to then just group together my expenses, and let's say they came back to £18,000, and I'm going to provide them as one figure rather than breaking them down into different sections. Capital allowances and balancing charges. So just a bit of background, capital allowances apply where you're buying assets. So if you're buying property or vehicles or machinery, plant and equipment, that kind of thing for use in your business, normally those are big purchases. It costs a lot of money. And rather than allowing the full amount of the purchase in the first year, typically what happens is HMRC will allow you to claim a percentage in year one, and then a percentage in year two and year three, and so on and so on. And you have to track the balance of your capital allowances each year and then write it down. So this can get a little bit more complicated where it applies, but where you're using the cash basis, which a lot of people use, it's very, very popular, you don't normally claim capital allowances. So everything on this page would just be left blank, and I'll save and continue. Goods or services used for my own use. I haven't provided myself with any accountancy services, so that's fine, I'll leave that one blank. And then we're getting on to questions about losses. So there's quite a few questions about losses. You have to read them carefully and again use the guidance. But if you had losses brought forward, how much do you want to offset against the 24-25 profits? I don't have any losses brought forward, so I'll leave that one blank. Any other business income not already included? Again, unlikely to get to this point and enter something in that box. And then we have more questions about losses. So losses for this year set off against other income for the 6th of April 2024, but before 6th of April 2025. You've got losses to be carried back to previous years, and then you've got your total loss to carry forward. So again, it's quite unlikely, or certainly less common, that people have loads of losses being carried forward and offset. If you do, it tends to get a little bit more complicated. The only thing I would say is that where you do have losses and you're carrying them forward, make sure you're entering your losses in this box at the bottom here, because if you don't carry anything forward in this box, then HMRC won't be expecting you to offset anything in next year's tax return. Deductions on payment and deduction statements from contractors. So this is the construction industry scheme. If you're a trade, then you may work under CIS, and the main contractors will normally deduct 20 or 30% from the payments that they make across to you. And then you enter the details here, and this will get factored into your liability or your refund come the end of the tax return. If you don't work in construction, then it won't apply. Class 4 national insurance. So this is the national insurance that will apply to your self-employed profits. These are a number of questions. They're looking for people that may be exempt from paying class 4 national insurance. Unfortunately, that doesn't apply to most people, so you'll just tick none of these apply at the bottom. And then we're provided with a blank text box to provide any other information relating to that self-employment. So if I wanted to provide additional information about a rental property that I had, I wouldn't do it here. This wouldn't be the right place. It's only information that would be useful regarding my self-employment. And I'll save and continue. I've then got my summary for my self-employment. So just check that everything looks in order. £75,000 of income, £18,000 of expenses, leaving me with a taxable profit of £57,000. Save and continue. Then have a page on class 2 national insurance contributions. I'm not sure if this page has just been left in, but class 2 NI has been abolished for the self-employed. So you wouldn't want to pay it voluntarily. So we'll tick no here and we'll save and continue. And then the last few questions, you're just confirming that these figures are correct. So did I underpay tax in earlier years that has been included in my tax code? So I would know about that because I would have letters from HMRC with a coding notice telling me that they're deducting certain figures. So I'm happy that I haven't had that and it's 0. So is this figure correct? Yes. And then the same again, estimated underpaid tax for the current tax year that we're looking at here to be included in your PAYE code. I'm happy that 0 is correct. And then amount of outstanding debt included in your tax code for 24-25. This one, if you don't owe anything, then you just put a 0 in that box. If you're then due a refund, you can provide details of where you want that refund to go. So bank account details. In my case, I won't be due a refund, so I'll tick not applicable. I'll have a liability to pay across to HMRC. And then where your tax liability is below £3,000 and you're submitting your tax return by the 30th of December, you can elect to have that liability collected via your tax code. So if your liability is less than 3,000, do you want it to be collected via your tax code? Mine will be over that, so I'll say no. If you're likely to owe tax for the current tax year, again, do you want it to be collected via your tax code? That would be the 25-26 tax year that we've moved into now. Again, I'm saying no to that one. And then we've got a few boxes for adjustments. This would be really, really rare that you're making adjustments at this point. But again, if they don't apply, you can leave them blank. Does your return contain provisional figures? I'll say no. If you get to the end of a tax year, or maybe the tax return is due, so maybe it's January, and for whatever reason, you can't pull together your self-employment figures, you are able to provide provisional figures so that you get your return submitted and you don't get a late filing penalty. But you would have to tell HMRC about that here. And by ticking yes, they would then expect you to come back and amend your return. I'm happy that these are final figures, so I'm going to say no. And then we're provided with an additional text box. So this one is general information. So if I had a bit of information to tell HMRC, something other than self-employment information, then I would let them know here. But again, if it's not going to benefit someone reviewing your tax return, then I wouldn't normally provide any information in this white space here. You can add attachments if you have any workings. You can add attachments if you have any workings that might be useful, and I'll save and continue. And then you can see, as I scroll down, that all of these sections now have the entered symbol next to them in blue. Now from here, if I then want to go and view my calculation, if I'm happy that I've provided all the numbers and all the details, I can click on next at the bottom of the page, and I'm then presented with a summary of my calculation. So this is only a little overview, and it just tells us how much tax we owe for the 24-25 tax year. So on my self-employed profits, I owe £12,628.60. However, HMRC are also asking for a payment on account towards the following year's liability. That payment on account there is 50% of the liability above. You will only normally be asked for a payment on account where your tax liability is more than £1,000. So if it's less than that, you won't normally have a payment on account. So that might be why you're not seeing it. But if it's more than £1,000, normally they'll want 50% again upfront by the 31st of January that follows the end of the tax year. And then you make a second payment on account. So that leaves me with a total liability by the end of January of 18,942.90. And then you would normally make a second payment on account by the end of July. Now mine is showing as 0 here, but you may well find that you've got whatever amount in January and then the same amount again in July. Mine is probably showing as 0 because of MTD. So with these numbers, I would be picked up for MTD filing, and I wouldn't necessarily need to make payments on account because I'd be doing quarterly returns and quarterly payments moving forward. If I then save and continue, we're then presented with the more detailed calculation. So we can see the 57,000 of profit from self-employment, which agreed back to that calculation, the summary we saw before. I have a full personal allowance of £12,570, which means tax is only being applied to £44,430. Tax is being applied at 2 rates. So the first 37,700 is at 20%. That's the basic rate tax. And then the remainder is at 40%, which is higher rate tax because I've crossed a threshold. The same applies to Class 4 national insurance, which for anything at basic rate is being charged at 6%, and anything over that at 2%. And then if you add the two of those together, the income tax figure of £10,232 and the Class 4 NI of £2,396, that gives us our total liability of £12,628.60. If I scroll down below that, then we just have that summary of when the payments are due. The only bit that does stand out on this page is that actually for my return, it is now showing a payment on account in July as well. But other than that, it agrees back to the summary page that we saw before. You can also view and print your full calculation before you submit. And then the only step following this would be to save and continue. I can reduce my payments on account if I want to. If I reduce payments on account, I need to tell them how much I'm going to pay. So instead of paying the 6,000, if I want to pay 3,000, I can enter that here. But then I'll need to give an explanation about why I'm claiming to reduce payments on account. Most of the time that would only be because your income is falling in the following tax year. So if you know that's going to be the case, I'm only going to make 25,000 of profit next year, and the tax liability is therefore going to be lower, then you can tell HMRC that here. But you can't just say because you don't have enough money to make the payments. If you reduce your payment on account and you end up underpaying the following year's liability as a result, then there's a potential for penalties, but certainly you'll be charged interest. I'm happy to leave my payments on account as they were, and I'll save and continue. I can save or print a copy of my return at this point. However, you can also log into your account once the return's been submitted, and you can normally view it from 48 hours after it's been submitted. You can view from within your account. And if I scroll down, save and continue, I have to make a declaration to say that all the information I've provided is accurate to the best of my knowledge. And then if I click submit, I'll then be prompted to re-enter my sign-in details in order to actually submit the tax return. That was a walkthrough of how to complete your self-assessment tax return if you are self-employed using HMRC's free online tool that you access via your government gateway. Don't forget to check us out at Adam Hill Accountancy using using the link below. I hope you found that useful. Please remember to like and subscribe if you haven't already. Thank you for watching. See you next time.